Hello everyone and welcome to Day Trader S&P 500. Today is October 3rd, 2023. It's a little after 1:30 Eastern Time. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. Wanted to get you guys up to date before I'm out for the next week beginning tomorrow. I want to touch base on the US 10-year. This is a daily chart. And I want to give you guys the big picture here, going back to the end of the 39-year bear market in rates from the 1981 high. That was the 30-year, it was 18. I think the 10-year might have been 16 something. Anyway, that was back in March of 2020. We had a wave 1 up here in October of 22, and then we had a wave 2 down. We had a trigger and a target, and the trigger has been met, and the target where 3 equals 1 is 7.255%. There are higher up targets, okay, and we'll get them. They're in the stratosphere, but that's okay. The 1.272 is 8.344%. The 1.414 Fibonacci multiple is 8.913%. And the 1.618 is 9.729%, just under 10%. Okay. Again, this took what, two and a half years to get wave 1. 3 should be sharper and faster and a different angle of ascent than the first wave. But that's what we're looking on the big picture. We'll look at the shorter term. Here we have a daily chart. That was a daily chart also. Okay, the near term. We had a target of 4.991 for the near term, getting close to it. It's at 4.789 as we speak. I've got about 1:40 something p.m. in the afternoon. Okay, so that's what we're looking at there. I'll show you guys our bond market report that we put out to our annual subscribers. And there's the announcement. It'll be out tomorrow. There's that 3 equals 1 target at 7.255%. That's a 1,318% advance from the March 2020 lows to yesterday's high. Okay, rates are screaming higher, and it's a third wave, and it's really just begun in April. So here we go. Okay, let's see. Is there anything else here? Yeah, there we go. There's the higher Fibonacci targets there. We've been long interest rates for years and short prices, so too bad it's not a timing service. I think we'd be #1 in bonds again. But let's get on. Okay, let's go to the S&P. It's a daily, this is an hourly chart from the B wave high. We've got this Fibonacci time zone. Okay, pointed to 818, got a low, wave 1 low. Next one, the 1.618, you can see it in the blue down here, pointed to September 1st, direct hit. The next one, the 2.618, pointed to 9/26, and the low happened on 9/27. The next date in the sequence is 3.618. That's October 18th. This was our trigger. It was activated today. We sent out reports. Here's our targets. That circle needs to go there. 42.70 was already hit. 41.96 is next on the agenda. Then 41.58 and 41.03 is the 1.618, and it's a third of third waves of at least a couple, 2 or 3 degrees of trend, so it could go further than the 1.618. But first things first, we're approaching the 1.272. Okay, this is a third wave of at least 3 degrees of trend. You can see the degrees of trend there, but we've got a wave 2 up here. It's not marked. This is a second wave here, and this B is also a second wave. So that's what we're looking at in the SPX. I think we have that in the morning alert. Went to our annual subscribers. There it is. That went out this morning earlier. Again, there's the announcement. There's the trigger activated. There's the targets there. Okay. Oh, I wanted to mention too. So this time zone targets October 18th in our Fibonacci time spiral that I've been using since the 1990s, over 25 years, points to 1024. So we expect this low to occur somewhere in that time frame, which was the same we had back here on the 1.618. I think we had a 920 was our target, and the time zone hit 26. It went 1 day later. So we're looking at it around that time. I don't think there's there's our trigger. It was hit, and there's our targets. People are really liking the triggers and targets, traders especially. So once it hits here, this trigger, then there's your next targets. It may not go straight there, but it'll get there. It's just math, like I always say, right? Okay, let's go into the ES, and here is a daily chart, same as the S&P cash. This is the futures, although this is a daily chart. Again, the one right on the 1.0 from the July 27th high, the 2 right on the September 1st, and then we've got the 926, and it hit on 927. There's our target. It was 42.77 down here. Went past it today, so we put out a report and let us know the target. Let our subscribers know the trigger was attained and the target should be achieved. Okay, the 43.10 was already achieved, so these are our next ones in line: the 42.32, the 41.91, and the 41.32. This is the S&P futures, EMInis. Okay, and the next date in the Fibonacci time zone is October 18th. Okay, let's get over to our report. Excuse me. Bonds and morning report. This went out to our monthly subscribers. There we go. Downside trigger activated, so targets should be achieved. Again, the first one was already achieved, so we'll see. This third wave is really unwinding, developing. It could go a long way. Anyway, again, the time zone targets the 18th. The time spiral targets the 24th. You can see it again down here. Okay, could that be the wave 3 low? More than likely. There's a trigger. There's the targets. Red trigger, red targets, and there are the target prices for you in print form. The previous trigger was 43.66, and it gave us these targets, and we hit the first, we hit the second. That open gap was out there since June. I kept saying that thing will be filled. It's so unusual to have an open gap in futures because they're open 23 hours a day, and then they're closed over the weekend. Anyway, that gap was closed as expected. Okay, we have make or breaks. It's these second wave highs. This one may not be marked at 45.66. There's 3 different second wave highs, so we're in a third wave. Let me see if I got that on the chart there. I may have the price. Yeah, I got the 45.66 mark, but that was 1 down, that's 2 up, and this is 1 down, and that's 2 with a circle up, and there was an A down into the October low, and that's a B up, or we could label it 1 and 2, but I'm calling it an ABC, a 5 down for A, a 3 up for B, and a 5 down for C, and it should take us below the A wave low. And I think we can look at the bigger picture. Let's see if we can look at it. You know, I'd have to really back this out, but maybe I will. Let's see, can we do it? Bear with me. I want to show you guys. Oh, that's the futures. That won't work. Okay, so I'll just have spot prices. Let's see here. There's our A wave low right there. Here we go. This is a bigger look at the bigger picture. Okay, that's where you get 3 degrees of trend. If I can get it all in here. There it is there. I'll tell you what, let me make this a full screen. Okay, here we go. Alright, January 4th we had a 1, 2, 3, 4, 5. Let's crunch it down. There is A down there. A 1 down, 2 up, 3 down, 4 up, leading diagonal and overlap. Actually the 5 is the leading diagonal, but anyway, I put it there because people might question the overlap. Then we had an A parentheses up, B parentheses down, C parentheses up into the 727 high, and you can see all those targets there that we had before. Okay, so that is the third wave. There's second up, 1 down, second up, 1 down is second up. It don't have it marked there. Okay, get you guys back to the excuse me, this picture here. Okay, in the E-mini futures, there are our targets. Make that nice and big for you guys. That's what, and there's that 2 with a 45.66 right there. Okay, had a lot of targets and actuals within 1 or 2 points of targets. So again, subscribers to the newsletter and the traders are really liking that. Okay, so that's what we're looking at. We'll see how this unfolds, and until next time, which will be the middle of next week at the earliest, if I get a chance, I will do reports and I will do videos. I just don't know how much of a chance I'm going to get, but if I can, I will. If not, we'll see you guys next week. Have a good one. Take care, everyone.